Question 276. Investment policies of a mutual fund are determined by A. The fund manager. B. The AMC management. C. The marketing department based on what distributors want. D. The investors. Answer B. The AMC management. Question 277. Which of the following measures are not taken by SEBI for protecting investors of mutual funds? A. Mandating minimum levels of diversification for mutual funds. B. Ensuring that the funds are not used to favor a few companies. C. Tracking the securities that each fund has invested in. D. Ensuring that the funds are invested in approved securities only. Answer C. Tracking the securities that each fund has invested in. Question 278. As per SEBI norms, a fund's investments in the equity shares of any one company are restricted to A. 25% of NAV. B. 10% of NAV. C. 50% of NAV. D. 100% of NAV. Answer B. 10% of NAV. Question 279. A mutual fund manager is not allowed to sell short when he expects a crash in the market. A. True. B. False. Answer A. True. Question 280. In a mutual fund, having many schemes, all securities bought can be held in a general account and transferred later to various schemes to attain certain profit or loss objectives. A. True. B. False. Answer B. False. Question 281. A mutual fund may invest in short-term deposits of scheduled commercial banks. A. True. B. False. Answer A. True. Question 282. Mutual funds are allowed to lend A. Loans. B. Securities. C. Physical assets. D. None of the above. Answer B. Securities. Question 283. In case of listed securities of group companies of the sponsor, mutual fund is not allowed to invest more than A. 25% of its net assets. B. 10% of its net assets. C. At all. D. Greater than 5% of net assets. Answer A. 25% of its net assets. Question 284. A mutual fund may transfer investments from one scheme to another. A. Not at all. B. At current market rates. C. At cost price. D. At a fixed premium over market rate. Answer B. At current market rates. Question 285. Interest rate risk for an Indian debt fund can be reduced by using A. Futures. B. Options. C. Interest rate swaps. D. None of the above. Answer C. Interest rate swaps. Question 286. The interest rate forecasting unit of a debt fund is generally manned by A. Technicians. B. Statisticians. C. Economists and econometricians. D. Accountants. Answer C. Economists and econometricians. Question 287. AMCs need not maintain records in support of each investment decision. A. True. B. False. Answer B. False. Question 288. When interest rates for similar maturities bonds are 11% bond with a 9% coupon rate will sell A. Above par. B. Below par. C. At par. D. At a price unrelated to the interest rates for similar securities. Answer B. Below par. Question 289. The most suitable measure for a fund's performance does not depend on the A. Type of fund. B. Investment objective of the fund. C. Financial market conditions. D. Amount invested by investor. Answer D. Amount invested by investor. Question 290. If the NAV of an open-ended fund was 16 rupees at the beginning of the year and 22 rupees after 13 months, the annualized change in NAV is A. 6.0%. B. 34.6%. C. 40.6%. D. 37.5%. Answer C. 40.6%. Question 291. Change in NAV as a measure of fund performance is more suitable for A. Growth funds. B. Income funds. C. Funds with withdrawal plans. D. None of the above. Answer B. Income funds. Question 292. The difference between NAV change and total return as measures of fund performance is A. None. B. Total return takes dividend into account while NAV change does not. C. Total return does not take NAVs into account. D. Total return does not take the time period into account. Answer B. Total return takes dividend into account while NAV change does not. Question 293. The most suitable measure of fund performance for all fund types is A. NAV change. B. Total return. C. Total return with reinvestment. D. None of the above. Answer C. Total return with reinvestment. Question 294. The expense ratio used for measuring fund performance is an indicator of A. Product market condition. B. Growth in the economy. C. Prevalent market practices. D. The fund's efficiency. Answer D. The fund's efficiency. Question 295. The expense ratio as a measure of a fund's performance is defined by a fund's A. Total expenses and average net assets. B. Total expenses and total assets. C. Average expenses and average net assets. D. None of the above. Answer A. Total expenses and average net assets. Question 296. While computing the expense ratio for a fund, brokerage commissions on the fund's transactions are not included in the fund expenses. A. True. B. False. Answer A. True. Question 297. The expense ratio is not of utmost importance in case of A. Debt fund. B. Index fund. C. Equity fund. D. Bond fund. Answer C. Equity fund. Question 298. The expense ratio is not affected by A. Fund size. B. Average account size. C. Portfolio composition. D. Stock market conditions. Answer D. Stock market conditions. Question 299. The income ratio as a measure of a fund's performance is defined by the fund's A. Total income and total assets. B. Net investment income and net assets. C. Total income and net assets. D. None of the above. Answer B. Net investment income and net assets. Question 300. The income ratio is more suitable for evaluating the performance of A. Equity funds. B. Growth funds. C. Regular income funds. D. Index funds. Answer C. Regular income funds.